So welcome everybody. We're really excited to have you for today's webinar, Understanding Borrowing and Credit in Canada, an Introduction for Newcomers. My name is Abigail and I work with partners here at CanadaVisa. I'm very excited to have our partner TD with us today for this presentation, as well as all of you. We're going to start this webinar with a presentation from our guest from TD, and then after the presentation, we're going to move into our question and answer period, which will give you the opportunity to interact with our guest. Many of you already submitted questions prior to the webinar, so we're planning to answer as many of those as we can. And we also encourage you to continue to ask questions throughout the presentation in the chat, and our team of moderators will be pulling those questions out and adding them to the question queue. So I'm now very happy to introduce our guest speaker, Bimpe. Bimpe is a product manager at TD, dedicated to revolutionizing financial services through forward-thinking and customer-centric solutions. With a dynamic career at TD for the past 10 years, Bimpe has advanced from personal and business banking roles to leading strategic product initiatives, which have elevated the customer experience, enhanced operational efficiency, and driven robust profitability. Outside of work, she enjoys cooking, learning new skills, and playing tennis with friends whenever she can find the time. So please remember just to not share any personal details in the chat, but do ask questions throughout. And I will now pass it off for our presentation.
Thank you so much, Abby, for that warm introduction. Thank you, everyone, for joining the webinar today. I'm very excited for the opportunity to speak to you all on the basics about borrowing and building your credit in Canada. This conversation is very personal for me. I was a newcomer to Canada just over a decade ago. I had no credit score because I'd never had a personal credit product. So I understand why you all are here, to understand the importance of learning about credit and wanting to have great credit. Your ability to qualify for credit actually depends on how good your credit rating is. So you know what? Let's just get started or dive right into it. And I need to. Abby, do I flip the slides or do you?
I can flip the slides if you'd like, or if you go to the slide tab on the right-hand side, you can also flip. But I can
yes, if you could.
There we go.
Thank you so much.
Just let me know when you want me to shift to the next slide.
Yes, you can go to the next slide. So I'm ready to start the presentation. Amazing, thank you. So what is borrowing? I guess we'll just dive right into it. If you go to td.com, any personal lending solution outside of credit card, it sits under the borrowing umbrella. So when we talk about personal lending, what we're talking about today, it refers to the money that you borrow under your personal name. And the borrowing in your personal name is your personal financial responsibility, and you're personally liable for the funds. So remember, if you borrow the funds, you're responsible for paying it back. These are usually unsecured borrowing options, which mean you borrow money without the need to provide any collateral or security for it. A mortgage, for example, is a secured lending product because you use your property, that's your home, as collateral for the bank to lend you the money. For the purposes of our conversation today, though, when we're referring to borrowing, we're referring to borrowing outside of credit cards. So credit cards are considered transactional products for day-to-day life. However, when we talk about borrowing products, we're talking about less transactional products. So commonly they're used to meet a specific borrowing need. This could be to renovate your home, if you need to fix your roof, renovate your kitchen, maybe your washer dryer broke, things like that. Or you need funds for a vacation, or you want to buy a car, or even education. I'll go through in more details the various needs later in today's presentation, as they vary depending on your life stage, your time in Canada, as well as your financial goals. So loans and lines of credit are common borrowing solutions, and both products can be considered when looking into what's the better option for your financial need and the situation you're looking to resolve. At TD, we have a variety of loans and lines of credit, each to meet the specific borrowing need. In the next section, I'll speak more to this when I explain what the differences are between the two products. Now let's move on and discuss how these products can help you build your credit. First off, credit history is extremely important in Canada because it's a record of how well you manage your money. Credit history is required when you need to borrow money for the bank, when you need to rent a place to live, when you want to buy a car. Basically, whenever you require a service on credit, your credit history is how your character is determined. We call it 3 C's of credit: the character, capacity, and collateral. Character, your trustworthiness, that's basically what your credit history is. So to build your credit, it's important for you to pay off your bills on time, use any money that you borrow responsibly, as well as following the repayment schedule you originally agreed to. Usually when you first arrive in Canada, the first credit product you will have or you will be eligible for will be a credit card. And it's an amazing way to start to build your credit history. I'll digress a bit. True story. A couple came into the bank back in the day when I used to work in a bench, and they wanted to get a mortgage. When we did the credit application, the application revealed that the spouse had no credit history. There was a little confusion in the room because the spouse was like, I've had a credit card for the past 20 years. I've been an additional card holder on my partner's card. When you're an additional card holder, you're not building your credit history, you're building the primary card holder's name. So it's very important to build your credit history. You need to have at least one credit product in your personal name. So now, as you get established, having a loan and a line of credit in the mix could add more depth into your credit history, as the product's purpose and the repayment structure are different from a credit card. Your ability to show responsible use of loans and lines of credit may yield a better credit rating than no history at all. So think a bit about leveling up. You've had a credit card, then you can get a loan, then you can get a line of credit. And it's also very useful when you're trying to be considered for larger borrowings in the future. It could be you have plans to buy your home or start a business at some time later on. So we'll move to the next slide. So I've spoken a lot about loans and lines of credit. For those of you who aren't very familiar, you're probably wondering, what exactly is the difference between a loan and a line of credit? I'll start with a loan. What is a loan? A loan is basically when you're approved for a specific amount of money in one lump sum. It's ideal for major purchases, such as maybe buying a car, buying furniture, home renovations, or maybe you even want to manage your debt. We'll talk about that later on as well. Since the money is provided to you at once, you know exactly the amount you borrow up front, your payments, and the interest that you get paid, that you need to pay, and it's usually over an agreed period of time. At TD, there is a choice to choose between a 1-year period to a 7-year period. The choice is really yours, and we refer to this as the amortization period. This is a time you will need to pay off the loan completely based on the payment frequency you choose. It's also used to calculate payments. In addition, you can choose between a fixed rate or a variable rate, as well as choose your payment frequency, which is how you want to pay back the loan. Most people align the payment frequency to their paycheck frequency. So if you get paid weekly, then you can choose to pay back the loan weekly. Or if you get paid bi-weekly, you can choose to pay back bi-weekly. We have the flexibility with the repayments that way. I spoke about interest rates earlier. Interest rates could be two. I said it could be the fixed rate or the variable rate. The fixed rate is exactly how it sounds. It's a fixed rate. You know, throughout the term of this loan, whatever interest rate is agreed to at the beginning will be the interest rate that I would have at the end of the period. However, when we talk about the variable rate, there is flexibility with the variable rate because it depends on the prime rate. So the prime rate is set by the Bank of Canada, and as at today, the prime rate is 4.45. So the variable rates on our loans are usually the prime rate plus a variance. Now, usually taking a longer amortization, if you choose a loan for say 7 years, it can make your payments smaller, while a more frequent repayment schedule, say weekly, could save you more interest on the long run than if you chose, say, a monthly payment. But regardless of your choice, it's important for you to pick something that works for you. As previously mentioned, there are different types of loans offered at TD. We have personal loans used for specific large purchases. We have the car loans. Those are offered when you're purchasing a vehicle, maybe from a dealership or through a private sale. Say your friend or your family friend is selling their used car to you and you need financing, you can come to us at the bank and we'll offer financing for that purchase. We also have RSP loans. So these are used to purchase investments into a retirement savings plan. That's what the RSP is, a retirement. So it's RRSP, Registered Retirement Savings Plan. A lot of people actually use an RSP loan to accelerate their retirement savings. But again, that's a conversation for a later date. So I've spoken a lot about loans. Now moving on, what is a line of credit? A line of credit is basically having ongoing access to funds that can be used, you pay it off, and it's available for you to reuse again. It gives lots of flexibility to borrow for a variety of needs when you need it. And a major advantage of having a line of credit is you do not need to reapply every time you need to access the funds because it's there. For that reason, it's a product that's harder to get approved for newcomers, as it requires more credit history on file before you can be considered. As a new Canadian, you usually start with a credit card. I mentioned that earlier. And then you could get approved for a loan, say in the first 6 months, and will be eligible for a line of credit once you've established your credit history and you've shown a stable repayment ability. Interest is charged only on the amount borrowed, and there is flexibility to pay as little as just the minimum amount that based on the agreement when you got the loan, when you got the line of credit. Given the flexibility, it's also important to be careful not to accumulate too much debt just by paying the product minimum. To really showcase responsible use of a line of credit, it's best to keep a repayment schedule personally that aims to eventually pay off the outstanding balance completely. Just because you have no end date doesn't mean that you should keep an amount owing on the line of credit in perpetuity. Remember, you're using the line of credit to build your credit history. TD also has a few types of lines of credit. We have the unsecured line of credit. We have the student line of credit if you want to further your education. We have the investment line of credit, which allows you to borrow against your existing assets so you can have a lower interest rates. Details on our loans and our lines of credit can be found on our website, td.com, under the products drop down, and it's in the borrowing section. So I've spoken about loans, I've spoken about lines of credit. I guess we can move on to the next slide. Yes. So we've said that we have lots of borrowing needs, and the lines of credits and the loans can be powerful tools that can address our financial needs and our challenges. These needs usually come after the needs that you have on the screen really usually come after you've started your life in Canada. And so we've categorized them into 4 groups. We have the unexpected expenses, the large purchases, manage your debt, and invest in the future. Unexpected expenses and large purchases, they may go hand in hand, because in both cases, you want to have funds that you need in an emergency, or you want to accomplish something in your short-term plan. So I've spoken a lot about, you could have unexpected expenses, probably something broke in your home, you need to fix. It happens, we have bad weather, so it could be that there was a storm and you need to fix your roof. It happens. Unfortunately, it does happen. And there could be other scenarios whereby you're just looking to upgrade your furniture or even your security system. Usually borrowing for those needs will allow you to handle those expenses easier out of your regular budget. Now, when it comes to managing your debt, this is not where we want to be, but we understand that life happens. If you've racked up quite a bit of credit card debt, which a number of people do, especially people who are new to credit, and that's why we're having this conversation, so you know what to do and what not to do. So it's very possible that you could come into Canada and you could get a credit card and you accumulate a lot of debt on your credit card. What we would recommend is for you to get a loan to manage the debt, as the interest rate on a loan product is lower than that of a credit card. It may make sense to consolidate all the high interest debt that you have if you have multiple credit cards into one loan, so you can have just one repayment with a goal to eventually pay everything off. And then finally, we have invest in the future. Could be another reason to borrow money. We think of this as using the money to further your future. Some reasons to borrow may be for an education program or to fund your investments. These are probably one of the better reasons to borrow money, as the money you borrow may help you become rich, whether it's growing your assets, getting a better job, or just basically expanding your knowledge. Now that we've gone through the borrowing needs, it's important for us to understand that they may change, especially as you enter various stages in your financial journey. So we've broken out your journey into 4 parts. I'm assuming that many of us here are in the pre-arrival stage of your journey. The suggested timeline could be months to years before you arrive in Canada. So this is usually your learning and research stage. The next 3 stages have a suggested timeline of the first 5 years that you're in Canada. So that's the arrival, the getting established, and the growth. So the arrival suggested timeline is like your first year in Canada. The need for borrowing products may be lower at this time, as your goal is to establish yourself and build your credit history. The products you start with are usually your checking account, your savings account, and a credit card. Once you start building your credit history, you enter more into the getting established stage. We think this timeline could be, say, year 1 to year 3, depending on how fast you're able to settle in. This is probably a great time for you to start thinking about loans and lines of credit and how they may help you solve all the sorts of challenges that you might have or that you anticipate that you might have. And finally, the last stage, which is the growth stage. Again, depending on how fast you're able to settle in, we're thinking this could be, say, year 3 to year 5. At this point, we're expecting that your daily routines and your work is stable, and there's capacity to start thinking about what's next. Borrowing needs at this point may be more about building a stronger future. Regardless of where you are in your financial journey, though, knowing your options and seeking advice from financial specialists may help you make more informed borrowing decisions. TD has lots of support for you from a financial specialist in our branches, the phone channel, or even through our website. So please don't hesitate. Get in touch for advice and support. Yeah, so we can move to the next slide. Okay. So we've talked a lot about borrowing and product options that you have if you have a borrowing need that will come up. In order to have credit work in your favor, it's important to consider a few things when borrowing money. The first thing is always review your budget. Consider your financial situation and make sure whatever choice you have, you're able to manage your repayments. Don't borrow outside of your means. Consider your income, consider your expenses, consider your existing debt. All those things considered will help you decide if you can take on more debt. Borrow within your ability. Will make borrowing less scary, and it helps you develop good debt behavior as well as improve your credit rating. Remember, there's good debt and there's bad debt. Good debt allows you to build credit and invest in your future. But bad debt, keeping up with the Joneses, is when you borrow more than your repayment ability. We don't want to do this. So to put a bow on everything that I've said, I would say that there are new to Canada offers available to all newcomers in most financial institutions in Canada. Please choose TD. These offers are tailored in a way that borrowers are not taking on more risk than necessary, and you're not applying for something that was not designed for you. They make it easy for you to integrate into the system and build your credit gradually. Another advice, be patient. Unfortunately, you won't build your credit history and get from 0 to 800 in 6 months. I know we want everything to be fast, but it takes time. The more you show lenders you make good use of credit that you have access to today, the more access to credit you will have, the better your credit score will be, and eventually, the less expensive the credit you use will be. So please be patient. Take it a step at a time. It's okay to envision larger investments such as buying a house or borrowing funds for investments or even for education. But understand what the requirements are today and have a plan. Walk towards your dreams. And remember, it's not about demonstrating that you can afford it today. It's about demonstrating that based on your past behavior, the banks can trust you with larger funds in the future as well. Thank you.
Great. Thank you so much. That was a very informative webinar. And now we will move to questions. So if you have questions and you haven't asked them yet, please continue to put them in the chat and we will try to get to them. We're now going to move to some of the questions that were pre-submitted, and then we'll move to some of the chat questions. So to start, a question on interest rates. Is it possible to switch from a variable interest rate to a fixed rate later on?
That's actually a very good question. I would say that it depends, but for most loans, you are able to switch from a variable rate to a fixed rate. However, it's usually difficult to do the switch on the other way around. When it's a fixed rate, it's very difficult to switch to a variable rate without refinancing. So always consider what option you want at the beginning of the loan period.
Great. Okay. And next question, also on interest rates. How can I know if a loan is offering a good interest rate?
That's also a very good question. I would say that a good interest rate is probably one that you think you're getting a good deal on. So if you know what your credit score is and you know what rate you think you should get, if you're getting a rate that is lower than that, that would be considered a good rate. And in order for you to know that, it's the only way to do it, unfortunately, is to shop around. You need to understand what the market is doing for the similar product that you're looking to get into. Also know your credit profile and your financial profile. The other additional things that we didn't talk about, well, that the question doesn't ask though, is whatever it is that if you're shopping around for a loan, there are different features within a loan that you need to be mindful of as well, such as the fees. There are some companies that charge an origination fee, a setup fee, an early repayment fee. So those terms are things that you need to consider holistically before you make your decision.
Okay, great. So now we'll move to the next set of questions. These are pre-submitted around making payments. So what happens if I miss a payment on a loan or a line of credit? What should I do?
Don't. The short answer is don't miss a payment, because if you're trying to build your credit, that's not a good look for you. You do have up to 30 days before it goes onto your credit bureau as a 30-day delinquency. That's, again, something you don't want, because down the road, it's going to have a negative implication on your credit score. But if life happens, I would say it happened. But it's also better for you to reach out to the bank proactively, because many banks have the option for you to postpone a payment on a loan. So I think some banks offer that flexibility once a year, and some do it twice a year. So if you know what, I have this payment coming up, I'm not able to make it, make a call to the bank to say, hey, can I please defer this payment? And most likely the answer will be yes.
Okay, great. So then on the other side of the spectrum, is it okay or preferable to make a payment before it's due?
Well, absolutely. So there are two things. If we're talking about a loan, it's pre-programmed, right? So a payment is going to come out on a due date. It will come out on the due date. If you make a payment into the loan account before that day, it's considered a lump sum payment. So it's not going to count towards the payment for that month. However, if it's a credit card, or even a line of credit, you have 30 days to make a payment on your account. If not, the minimum payment will be taken out. So if you make the payment early, then that's good. It's great. So I guess the short answer is yes, 100%. If you're able to make a payment before, please do.
Okay, great. So now for the next section on lines of credit and borrowing options, I'm going to switch to a question from the chat to start. This individual asks, how do lenders decide how much someone can borrow?
That's actually a very great question. So I would say that every institution has their credit policy, but tied to all that is the 3 C's of credit. So it's the character, your collateral, and I can't remember. I'm drawing a blank now on the third one. So, and your capacity. So you have when a customer comes in and wants a loan or a line of credit, the first thing that we are asking ourselves is, who's this person? Do they have a relationship with the bank? If they do not, what's their credit history? It tells us, do they repay their loans or not? The next thing is, what's their ability to repay the loan? Do they have an income? And what's the proof of that income? So if we see the income, then that helps us understand that whatever amount that this person is asking for, this person can actually repay. We also look into other expenses that you might have. We know that people have a life, and so you probably have to pay for gas, electricity. So factor all those in and have some kind of monthly expenses that you will need to make in addition to this loan. And based on that calculation, we're able to determine how much we can provide to you that will not be a hindrance to you, and you will be able to pay within your means.
Great. Okay. Another question is specific to international students. This individual asked, what borrowing and lending options are available for international students, maybe specifically towards paying for tuition?
Okay. So as an international student, it is tricky. So yes, we do want to support you, but in many instances, you will require a co-signer who must be a Canadian, and preferably somebody who banks with TD. So based on that, we're able to provide you with a student line of credit to help with your tuition.
Okay, great. And then more of a general question, as a newcomer, what is the best way to start borrowing responsibly? And are there any mistakes that should be avoided or that people typically make when they get their first credit card?
That's actually a very great question. I would say that, yes, you usually get your very first credit card as a newcomer. Something that you should always know is very, very important. And I think it's really the mistake, though, because that's how you get the missed payments, and that's how you get into trouble, and then you start to destroy your credit, is setting up the minimum payment option. So a credit card gives you 30 days, 21 days grace free period to pay back if you're able to. If you're not, on a specific day, I guess the 1 month cycle of your credit card, you will be charged either the minimum payment or the full payment. I would recommend to anyone who wants to build their credit to set up that automatic debit to take out the minimum payment from their checking account, regardless of what it is. That way, you never miss a payment. And if you never miss a payment, then you're good. You can always pay more. And for a credit card, if you pay before your payment date, then that minimum payment doesn't get taken out. So that's just a protection for you. I would say that's the number one and really best way to avoid the pitfalls that people have. The other thing, again, is don't overborrow. Usually we say that on a credit card, try as much as possible to have, say, a 30% utilization rate on your credit card. Don't go more than that. If you do that, then I think you'll be fine.
Great. And then a question building on that, how long does it take to generate your credit score or have a credit score after starting to use a credit card?
So I'm not a credit score expert. So, but I would say though that the banks report to the credit bureau monthly. So if you get a credit card with the bank, chances are you start to build your credit right away. For you to report onto the credit bureau, I would say give it 30 days, 45 days, 60 days. But then it's just starting to build, and you cannot determine, your character can't be determined by the first report. So it takes time and it's gradual.
Okay. And then how can someone go about finding their credit score? Is there a tool to find the credit score or to estimate their credit score?
Yes. I believe that most banks now, through the app, actually allow you to check your credit score. And it's a soft check. So it's not a hard check. So it doesn't really impact your credit.
Can you just differentiate for people what a hard check is?
Yes, happy to do that. So when you do a credit check, each time you do a credit check, I believe some points go down on your credit bureau. That's why the advice usually is, even when you're shopping around, make sure that you're not getting multiple checks on your credit score, because each time you check your credit, it goes down, and then you don't want the perception to be this person is just going racking up debt through all the different banks. So a hard check impacts your credit score, a soft check does not. So the soft check is what we have, and I believe most banks have this, if not all banks, whereby through the app, I know our bank does, you can actually check your credit score, you can monitor your credit score, and through the app as well, there are actually simulations that can help you understand what you can do to improve your credit.
Great. Okay. The next question, you touched on this briefly in terms of an example. This question is maybe a little bit of a different scenario. If I share a bank account with someone, does their credit affect mine?
I would say if it's a bank account that there is no borrowing on it, then no, their credit score will not impact yours. However, if you guys are now borrowing together, like you have a joint loan or joint line of credit, then yes, if there is a late payment on that joint loan, it's going to impact both your credit scores.
Okay, next question is, let's see, what is the difference between a loan and a line of credit?
Okay, great question. So I would say that, and I think I touched on this earlier, a loan is when the bank gives you a lump sum, and then you have a certain length of time to pay it back. And it's an agreed amount, for that entire period. A line of credit is when we give you, it's like a credit card basically, whereby we give you a line, say a 5,000 line of credit available to you to use for anything. And you can choose to pay either the minimum payment or make the repayment as you wish. So there's more flexibility with the line of credit. But it's also easier for you to destroy your credit with a line of credit than with a loan, because a loan you're forced to pay down. A line of credit, you're not.
Okay. We'll try to get through a couple more questions. This individual asked, does applying for several different credit products hurt my credit score?
I would say it depends. Are you applying for all the credit products at the same time? So I think I touched on this earlier briefly, which is assuming you want to buy a car. You can shop around to see what car you like, but you don't want to go into each dealership to say, I want a loan from you and you and you, and go to 5 different dealerships and get a loan with a hard check. All those checks impact your credit score. So it's better to have the conversation up front, understand what the terms are, understand what they're willing to offer you, and then pull the trigger on one after you've made a decision.
Right.
But as a newcomer, I also understand that you could, as part of the stuff that you need to do to settle in, you would get a credit card, you would rent a home, you would buy a car. So all those things are happening fast and furious, which is fine because they're different things and you can always justify it.
Okay, this question is from the chat, and we'll maybe ask 2 more questions. Are there any loan programs specifically designed to support women? Or for niche groups, are there just general loans, or are there specific loans based on your background?
So that's a very interesting question. So when I'm not sure if the person is able to respond, but when we say women, are we looking at business loans? If that's the case, I do know that there are some programs that we have that support different segments within the business bank. So if we're supporting loans, if we're looking for loans to support women to start a business, then yes, that exists.
Okay, and maybe not in other cases. That was in the chat, but I don't see a response, so I'm going to move on to the next question. I think this is a great question from the chat. Does paying the minimum balance, so maybe I'll rephrase this. If I only pay the minimum balance, will I still pay interest on my credit card borrowing?
Yes. So yes, you would always pay interest on the amount that is borrowed. And the bank will always, whatever amount that you pay into your account, the bank will always take the interest first, and whatever is left will be the principal. So yes.
Perfect. That was a great thing to clarify. And then maybe this will be our last question. What credit score do I realistically need to qualify for a good interest rate or a car or a home loan? Is there a range of credit score just that people should be aware of that is a good credit score?
I would say that an okay credit score, like to get approved for most things, is usually around 650, 680. But if you want to have great credit, I would say you should aim for 720 or higher, or even more, like 750.
Okay, great. Perfect. Thank you. We got through so many questions there. So we'll wrap it up now. If you do have more questions, it's a complicated topic, I know. TD has various articles on the CIC News website that you can visit and read, peruse, and learn more. And I also would encourage you to visit the TD website itself. You can reach out to an advisor. You can visit a branch near you, and if you're in Canada, and ask your questions. But thank you so much to Bimpe for that very informative discussion and question and answer period. And to all of you for coming. You'll receive the webinar and the slides in an email sent to your email that you registered with tomorrow. And we hope that you'll join us for another webinar in 2026. So thank you, everybody.
Thank you for having me. Thank you. Thanks, everyone.
Thank you. Bye-bye, everybody.